Welcome, ladies and gentlemen, to our valedictory session. It has been very inspiring and insightful 2 days. We have many speakers, experts from the field who have discussed the way forward. We have discussed the challenges and the issues faced in particular sector. We've also celebrated some very gracious moment. We have had fireside chat, listening to the stalwarts of the industry. Now we are proceeding towards the closure of these 2 days big national conference, and we once again thank you all for your grand support. We begin this valedictory session by welcoming our valedictory session guest. May I request Gigi sir to kindly welcome Dr. Y. Haragopal with a planter and a shawl. And may I also request a comrade from our Sa-Dhan team to kindly join us onto the stage to present the planter and the shawl. With a huge round of applause, ladies and gentlemen, we also welcome the stalwart of our sector, Mr. Vijay Mahajan. Warm welcome to you, sir. Thank you so much. We call the valedictory session to order, and may I request Dr. Haragopal to kindly deliver the special note.
Shri Vijay Mahajan ji, the doyen of microfinance industry, Shri Gigi Meman ji, my mentor in NABARD and outside NABARD, distinguished ladies and gentlemen, after 4 plenary sessions, 6 breakout sessions, 1 fire chart, 1 inaugural, 60 plus speakers, I'm just wondering what I should speak at this point of time in the valedictory session. But nevertheless, in the last 25 years, we have seen how microfinance sector has become a cornerstone of India's socio-economic transformation, fostering financial inclusion, women empowerment, and also the empowerment of artisans, small and margin farmers, and other vulnerable communities. Millions of the people have got access to the credit, low-cost credit. I don't say low cost, they got the access to the credit, collateral-free, and also on a timely manner. And these are the institutions. I mean, we have seen how NABARD has started this journey in the late 80s and beginning of 90s, working with these unbankable, unreachable, underprivileged sector of the segment, I mean, bottom of the pyramid, by transforming them into, who are not able to give any collaterals, because at point of them there is no credit history. So, and in the last 30 years, 25 to 30 years, the sector has grown phenomenally, thanks to the various players in the industry. We have seen the NGOs those days, I mean, definitely someone was talking about how they have transformed organically in becoming MFIs, then to SFBs and universal banks. And the other side also, the demand side, definitely the micro entrepreneurs, micro borrowers has become micro entrepreneurs. They started micro enterprises, and it's moving on. So I was asked to speak something in Amrit Kal. So if I have to speak microfinance sector in Amrit Kal, in Viksit Bharat period, so I have to say something about the economy. I mean, if you look at our Indian economy has shown strength despite global changes, global challenges. I mean, growing at our GDP growth is around 6.5% last year, and first quarter, it was around 7.8%. And IMF says that the GDP will grow at around 6.5% current year. RBI is also saying the same number. And Definitely, we are on a very clear path to become a third largest economy because our economy is growing much faster than global average of 3%. Even Niti Aayog also says that the current economy at around 4 trillion will become 6.6 trillion by 2035. And if there is a push in the AI, so economy might even grow at 8% and reach to the level of 8.8 crore. So those are the numbers which are available from the economy perspective. Look at the numbers of the credit, bank credit in the last 10 years, because it's all extrapolation. 2015, the bank credit was around 65 lakh crore, and as on 31st March 25, it's around 180, and as on October 31st last month, it was 192 lakh crore. And similarly, it has grown at around 10%. And if you look at the microfinance loan outstanding also has grown phenomenally from around 1 lakh crore in 2015-16 to last year it crossed 4 lakh crore, and last year, as on 31st March 25, it was on 3.8 lakh crore. That means the growth is visible in terms of numbers. So extrapolating the same, if you look at the way the credit is growing at around 10% and microfinance sector, the loans are growing at around 15%, we definitely foresee that the bank credit to reach around 500 lakh crore by 2035, and also the microfinance to go, even if we take 2% of that, because currently it's around 2.2%, so it will be not less than 10 lakh crore, 10 trillion by 2035. And of course, it's very difficult to go beyond that by 2047. Definitely there will be growth, but meanwhile, the micro may become, there may not be micro entrepreneurs or micro borrowers. Probably there will be growth in them also. But yesterday, DFS Secretary was saying that still 35 crore people are still financially excluded. Probably these are the people who, we have to bring back to the inclusion path. And then, of course, I have worked in the refinance department. I have seen how the microfinance sector has shown the resilience, because I worked from 2015 to 23 period in Bombay Department of Refinance, and I have seen the resilience this sector has shown, especially during demonetization, natural calamities, and also COVID times. Except a few cases whose balance sheets have gone red, but most of the players have shown the resilience and they moved forward. From the perspective of the moving ahead, there is, if you look at even today, digital has become a way of life, and digital transformation has to take place even in the microfinance sector, whether it is credit assessment or risk mitigation. We need to use the AI, ML, and data analytics and predictive analytics, because we are, if you talk about AI, we are at a kind of point where there is a need to embrace AI to grow our economy as well as the microfinance sector. And also, there is a need that the diversification part. Yesterday also, my chairman was saying that there is a need to diversify from the microfinance to other sectors like education, health, and insurance. Because if you look at, probably I was just trying to analyze why the outstanding has come down. There could be some other factors as well, because the loan outstanding of SFB, and especially those who are listed in the market, the market is looking the microfinance from a different lens. So even those entities which are listed are trying to diversify to other sectors, although their balance sheets are growing, but the microfinance outstanding might be coming down. That could be one of the factors why the outstanding has come down in the last fiscal. Of course, there is a point that 1 crore borrowers have moved out of this microfinance, but still the market forces and investors are also deciding where this outstanding has to go up. Besides this, of course, the microfinance will be a part of the growth journey of Indian economy, and I foresee that the sector will grow much more actively because there is a lot of regulatory framework that has come up compared to earlier years. Today also the DGM of RBI was saying the the harmonization and level playing field which was given to the NBFC sector, MFI sector, whether the interest rate is being, the advantage is being given to the borrowers. Those are the things which we need to take a relook by the MFI sector and take a kind of plausible decisions in future. Thank you so much, Sa-Dhan, for giving me this opportunity and having me here during this valedictory session. Thank you so much.
Thank you so much, sir, for your encouraging words. May I now request sector expert, Mr. Vijay Mahajan, to kindly give the valedictory address.
Thank you. Thank you, Haragopal Sahab, for making my task easier, because you've given a very good overview, particularly of the developments in the last 8-10 years and the broad picture of overall growth, and lots of good numbers you've shared. Thank you for that. I noticed that I've been introduced as a sector expert. The only thing that is true there is X. So, you know, I retired from basics in 2016, and with that I pretty much also retired from the sector. So only X applies. थोड़ा बहुत लोग मिलते रहते हैं तो खबर मिलती रहती है, and once in a while I do look at the annual the productions of Sa-Dhan and MFIN, so I do get a sense of the broad sector, but I'm really now a interested layman which is fine because I have no axe to grind, but basically sort of getting a lot of conversation. I can hear you here. So, I just want to, this is, if I had continued, this would be my 30th year in microfinance. In terms of actually doing it, and maybe 35th in terms of studying it. So I can really give you a kind of a long-term view, and also both a retrospective and a prospective view. So first of all, let's spend a minute on why is it that we needed microfinance. Remember, in India, the banking sector was nationalized in 2 rounds, but starting from 1970, and then the second round in 1980. And it was primarily done so that the savings, household savings which get accumulated in the banking sector through deposits, are then utilized for reinvesting in the productive growth of the economy. And through a process of directed credit and priority sector lending, and because it was found that unless banks are under state ownership and fairly strict control, this may not happen, so banks were nationalized. So the experience of that was mixed. It did disperse the credit from metropolitan centers to the rest of the country, but it did not really go down very much. And then in 1980, a government program was started called IRDP, Integrated Rural Development Program, which was actually, despite its name, it was half loan and half subsidy. And the loan was to come from banks. And even when IRDP was launched on 2nd October 1980, it was, even at that time, the world's largest poverty alleviation program, because every year 3 million loans were to be given to specifically identified below poverty line families. And roughly half that money, or 2/3, was coming from banks as loans. The rest was coming as subsidy from the government. The IRDP became a nationwide program fairly quickly, but sadly, in just 10 years, it became a first IRDP was translated by bankers into itna inko rupya dena padega. And then after 5 years, it became itna rupya dubona padega. So these two long forms of IRDP became the summary of what happened to social banking, particularly for the poor. And when the Narasimhan Committee in 1991 or 2, post-liberalization, decided that banks should focus on their bottom line and on their asset quality and all of that, basically, social sector was given a backseat. The numbers spoke from themselves. By 1989, roughly 20% of net bank credit was in loans below 25,000. In just 5 years, by 1994, it had come down to 4.5% of net bank credit. So it was in that context that everybody from political leaders to the Ministry of Finance to the RBI were searching for alternatives. And I was lucky that the person who taught me economics at IIM Ahmedabad, Professor Rangarajan, became the governor of the RBI during that period. And he vaguely remembered that there was a chap who used to always talk about lending to the poor and all that. So he called me and said, you had all these ideas, do you have some suggestions? And I said, sir, I'll do it systematically. And then I went to Ella Ben and several of us, Al Fernandez, we came together. And broadly, two ideas were offered to the RBI. One was the self-help group idea, and the other was the microfinance direct lending idea, which was the Grameen Bank Bangladesh model. And because Grameen Bank had already started in 1976, in India, Seva Bank had already started in 1974. The self-help groups they were very few, but they didn't really exist in a large number when we started this dialogue. Anyway, fast forward, by 1996, the self-help group idea had found favor with the government and with the RBI, and a lot of promotional support was given. The regulatory framework was changed, allowing, the biggest change was that unregistered self-help groups were allowed to open bank accounts. And NABARD was given the charge to take this model nationwide. And the rest is history. In 1996, there were not even 10,000 self-help groups in the country. And today there are, I think, more than 1.1 crore self-help groups. So it's an amazing piece of social engineering that we have witnessed. And you know the numbers of outstandings and so forth. However, the SHG, at least in the early years, were giving rather small loans. And there were many entrepreneurial poor who needed much larger loans. And that's why people like me said we need to have a second model. And so while I remained very, very strongly in favor of the SHG movement, I also proposed that there should be a second channel for microfinance MFIs. And that's how the microfinance sector started, which followed about with a 5-year delay. Again, Haragopal Sahab has already given you the overview, but basically I recounted this history because if India as a nation has to grow, it's too large a nation for just a few to grow and the rest to remain poor. And therefore we do need, which is one of the sub-themes of this conference, inclusive growth. And if that means we need inclusive access to finance. And therefore, the primary purpose of this sector, whether the SHG model or the microfinance model, and within microfinance, I know there are now multiple channels, NBFCs, MFIs, banks, local area, or the small finance banks, all of that. But the purpose of all of these is to provide access to finance to the poor. For what? Not to reduce the gap between their consumption aspirations and their income, but to enhance their income so that from their income they can make or they can buy goods and services which they are aspiring for. Unfortunately, the sector has transited from being a source of productive capital to the poor to a source of consumption finance. All the numbers that Mr. Haragopal mentioned are absolutely true. The number that is not monitored and not talked about is what percentage of it is actually being used for productive purposes. And both from field visits as well as national sample survey data, and there are multiple sources from where I'm speaking, we know that an increasing part of the so-called microcredit is actually being used to meet consumption aspirations. And at least in the early growth part of this, one loan was used to repay the previous loan, and et cetera, et cetera. I mean, evergreening was happening not at the level of MFIs, but at the level of the household. But there's a limit to that. And then when the post-COVID serious growth in microcredit happened, within a year and a half to 2 years, you saw the buildup of NPAs and whatever has happened in the last 2 years. So all you have to do is look at the NSS data on what is the household income and what is the household expenditure, and you will find that the bottom 4 deciles are deficit in income. Now, credit cannot handle income deficits. It requires something else. It requires social subsidies, it requires freebies, I don't know what. But credit is not the answer for that. But what has happened is the sector in its quest for growth, the borrower in their quest for meeting their consumption aspirations, the two meet, and while aggregate growth continues to happen, the asset quality quietly transforms from being productive loans to hard to repay consumption loans. And that is the story. As Cashport CEO Mukul Jaiswal said very succinctly in his 30-second summary, I was listening from the back, that if only we had followed the RBI guidelines to measure the household income carefully, we would have probably done much better. The fact is, we can use either high-tech or high-touch to measure household income. But if we are incentivized to lend, irrespective of what that number is, then that's what we'll do. And the sector, sadly, starting from the equity investors, private equity or social sector, to the top management, to the operations management, to the field agents, are all incentivized to increase portfolio and apparently performing portfolio. And the borrowers are all incentivized to borrow more. And this game can last for a while, but it will not go on forever. So what's the solution? And I'll take just 2-3 minutes. First is, even now it's not too late. Before we go from 4.5 lakhs to the 10 lakh crore number that Haragopal Sahab has mentioned by 2035, maybe even higher, we need to change the nature of our credit. Even if it's not 10 lakh crores, it's only 6 lakh crores, let it be 100% for productive purposes. You give more for consumption purposes, you're just actually spoiling the borrower, spoiling your own future, spoiling the sector. So we've got to, and my saying this is not enough. Everybody from the private equity investors down to the field agent needs to understand this, otherwise we are moving towards a collective death. One. Secondly, why 30 saal ho gaye, the same old model. Please change your ways. I still find there are group meetings going on. There's still naam ke vaste group loans being given. You know, it's a completely archaic system. So we need to change the subroutines and the way we work. We must recognize that even the poor don't have enough time to, spend time on weekly meetings and all that. There are transaction costs. The old need for meeting in person for cash transactions is no longer necessary thanks to universal UPI and all that. So we need to change our ways. But at least part of the sector needs to learn that the real sector in India, which is in need of finance very badly, is the next level, the lower end of MSME, where the average loan size is maybe 5, 7, between 2 to 10 lakhs. If you look at the annual survey of the unincorporated sector enterprises, 23-24 data, India had 7.34 crore, and that comes from the next rung. There are only 96 lakh HWEs, hired worker enterprises in the country, close to 1 crore. Their average employment is 4.6. Their requirement of credit, both working capital and investment credit, is in lakhs. Maybe 2 lakhs at the lower end, maybe 10 lakhs at the upper end. That is the sector which requires the same level of courage and smartness which was applied to microfinance 30 years ago. But उनको आजकल क्या मिलता है? या तो सरकार से मुद्रा लोन मिलता है, या LAP, this silly thing called loan against property. That's all. There is no true MSME lending, very little that is happening, certainly far lower than what is required. And if we can give an average of 5 lakh crores to all those 1 crore enterprises, you get 5 lakh crores. So imagine the growth that we can see in the sector. So for its own sake, for its own survival, for its own growth and for its own thriving, it's time that the microfinance sector and its leaders and its regulators and its well-wishers and people like Tamalda, who've been long-term observers and commentators on it, people like MS Sriram, time we all sat down together and envisioned a future where we become agents of economic development of the nation, not just one more asset class. We have just become micro personal finance, and that's not why this sector was set up. With that, I would like to end this somber valedictory address, but I hope that, as an expert, I have spoken what is needed and not what is pleasant. Thank you very much.
Thank you so much, sir, for those very inspiring and encouraging words. Thank you once again. This is a moment to thank our honorable dignitaries on the dais. And may I request Ms. Dolly Kaushik to kindly present memento to Mr. Vijay Mahajan, our comrade from Sa-Dhan. Ms. Dolly Kaushik is requested to kindly join us onto the stage and present a memento to Mr. Vijay Mahajan. Our heartfelt gratitude to Dr. Y. Haragopal. Thank you once again, sir. May I request you for a photograph, for a group picture? May I request you, sir, for a group picture, please? We quickly take this as a photo op. Thank you so much. Ladies and gentlemen, a huge round of applause for our honorable dignitary.